Hello, Warriors. How's everyone doing today? Good morning, Didier. Jason Wright, nice to meet you. Ren, Brock, how are you? Alexander. And the rest of our face warriors doing okay. Hello, Bruno and Hugo. Okay, so I know that the yen, a lot of people don't want to trade it, a lot of false signals, etc. But when you look at it, guys, after this big move, it's possible that we might even be bottoming here. So with the dollar under pressure, the yen is acting not bad. And even with the dollar under pressure, the euro, I don't think proves itself to the upside until we're back over 122. Okay. If we can't close over 122, I think there's another shoe to drop. And this surprised me. Okay. Canada washing out to new lows. I thought this stop hunt would have been enough. So this ended up being another false start. Um, but crude is not making new highs. Hello, Arena. Crude tried to make new highs yesterday and was unable to. We got very close up here. Maybe it's still got one in it, but I think the whole board of risk on is due for some type of pullback. Even the S&Ps, which I'm taking a shot at from 63.80, risking 15. I have nothing to say that it's major, except you still look at the daily, and the daily is, confirming for the billionth time. Anyway, I thought I'd take a shot after the inauguration. Um, it could be a day trade. I could get stopped out. Um, the guys here have a line, an alert right here. See this dotted line. So that'd be a good place to take profits if we got some type of sell off from here, because the RSI on multiple time frames you could see is way over 70. Okay, that's a 2 hour. The 4 hour similar. The 15-minute though did not confirm up here last night, and maybe we get one more push up here, but this is a trade off the 15-minute time frame. Oh, I'll just contact customer service, and yeah, you have to do a 5 lot. Thank you, Bruno. Gold, I know a lot of people, think that the break might be over in gold, and I think we're going to have some trouble up here around 1880, and I still think there's one more shoe to drop. I mean, everything's, let's face it, the market's starting to price in a Biden victory and what the Democrats are going to do regarding spending. And actually, silver has the same look. What's interesting is I saw a tweet by David Brady yesterday, and I've interviewed David several times. He's very good at inflection points. And his point in silver, and he showed a chart, is that the retail trader is very, very long silver. And so his contention is that there has to be more of a shakeout in silver before we could look for some more upside action. So, David Brady's a long-term bull. In fact, on the COVID crash, some of the guys I work with, he was buying that day. I interviewed him. Um, Physical, okay, down there when we were at 11, he had to pay um, well over a spot to get it. Okay, yeah. So, but very good inflection point. And he's not a perma bear in stocks. or, just because he thinks, okay. All right, Pepperstone does not, okay. Who would ever use 3,000 to 1 leverage? Anyway, so keep an eye on the oil. I'm still stalking gold for one more short. May not happen this week. It might be next week. And as soft as the dollar is, we haven't even taken out this pullback low yet. All right. So, I still think there's more upside left in the dollar before we go to new lows. My bet is that we're heading higher before we take out this low. So it's just a pullback. And what kind of convinces me is that cable is the commodity currencies, and then cable and euro bringing up the rear, that most bear markets in the dollar happen with leadership in the euro, not in commodity currencies. So that's another reason to be careful about getting too beared up about the dollar at this point. Okay. And I think that's about it. Aussie is almost at new highs. On the daily, it won't confirm if we get up there, which it did right up here. But a new high in Aussie this time will not confirm on the daily. Maybe not the 4-hour. But the preferred chart most likely. I don't follow it, Arena. I follow enough. I have enough to concentrate on. But are we sharply lower? I have it up here.
Bitcoin's down 10% or so.
Oh yeah, 8% right there. Good morning, Stel.
Stelios, I was actually just going to talk about that too.
Okay, well then you guys could take. Why don't you take it then, Blake?
Well, Stelios, why are you looking at Bitcoin this morning?
Just because it's it's the biggest mover of the day. I'm not trading it.
No, I'm not questioning that. But is there any reason aside from it being the biggest mover of the day?
Not really. No. Okay. I just have it in my view list. That's all.
Got it. For me, it's and I'm sorry, Dale. I just wanted to say this. For me, it's one of those asset classes that has really shown the market that it's willing to take on risk on.
Yeah, that's it.
Yeah.
So you're following it because it's really the biggest risk instrument on steroids.
I really think it is.
Okay.
Now, obviously, that it's very speculative at this point, but there's people will have all their reasons why they're buying it, or it's institutional buying now, and it's this, that, and the other thing. But I do believe it is actually viewed as a risk asset. So as Bitcoin goes higher, makes sense that it's going higher, stocks are going higher, all assets are kind of rising in value. But when you see Bitcoin actually start to show some signs of weakness, which we are right now, let me get rid of this. Okay. And you got Bitcoin actually breaking lower, kind of, and I would say aggressively today, because as Stelios pointed out, it's down, what, 10% right now?
8.2.
Yeah, 8%. It's down 8%. I mean, that's a pretty big breakdown, as Stelios pointed out, and I think that we have to pay attention to it, because if Bitcoin's moving lower, will there be any knock-on effects to the rest of the market? That's what I'm more curious about right now. So anyway, so good morning, guys.
Morning, Blake.
Good morning, Stelios. Good morning. How are you? Welcome back.
Good morning, guys.
Hey,
good morning, Steve.
Wow, Steve's even here. I didn't expect Steve here.
Just came back from picking up the little guy. Just.
Oh. Well, welcome back.
And for people who don't know, the little guy is his son. He doesn't use any other slang.
I was gonna say, I didn't do that. I didn't say it, but I was thinking the same.
It's
anyway,
not like
anyway, he's too young to need to pick it up.
It's not like it's not prison lingo.
Pretty soon with this show is going to be censored. I can feel it.
It's
Right,
R. It's R. Not X.
So,
It's R.
hey, really quick before we get completely off topic. So, Steve, we were just mentioning Bitcoin and the move in Bitcoin overnight and kind of how it's starting to sell off. Do you read any into it other than I know I mentioned that I see it more as a risk asset. So when it starts to come down, have to start watching if there's any follow-up effects on other markets. How do you feel about this move in Bitcoin right now? Other than you think it should be coming down?
Sorry, me or Stelios?
Oh no,
I
you,
can
Steve.
answer that too. But go on,
Oh
Steve.
yeah. No, I was giving Steve an opportunity to talk here.
First of all, I think the move higher is more or less clearly impulsive. I agree with you 100% on the part that, if anything, Bitcoin is probably the riskiest of assets, right? And I'm not even sure about the word asset, instrument, let's say. Now, you can never know in advance what kind of form a correction will take. My initial thoughts was that this was a triangle. If we close today below the trend line you're showing, obviously that's not the case. I'm assuming that a lot of the retail speculators jumped on this move, near the highs as it usually happens. So probably these people need to get shaken off before we move higher. Now, if I do think that it's leading a possible move down in stocks, I don't think that Bitcoin is leading anything.
Yeah. Okay. Yeah. I just thought it's something that we've had discussions with the guys that I trade with about, kind of keeping an eye on Bitcoin just in case it does start to show. It seems like more of a topic of conversation as of late, like in the last couple of months versus, before we didn't even care. So
The opposite, though, is definitely the case. I mean, if we do see a risk of move in risk assets, pretty sure that's going to help accelerate, the downside in Bitcoin and cryptos. There's no question about that.
yeah. Okay. No, just thought I'd ask you guys. All right. Well, let me get through the analysis of, and thank you guys for your input this morning. I'm going to get to the analysis of what, what's right in front of us with the FX market. We did just have the ECB make their rate decision. The euro has pushed to new highs. They basically left everything unchanged. The euro is back at the 618 retracement, what we had down yesterday at the 121.60 level of resistance. So it's something to pay attention to, that the euro is trying to get a foothold here and quite possibly break a little higher. So what I'm going to do is I'm going to go to a 1 hour chart. Now, remember, we do have Christine Lagarde. She will be speaking here shortly. And I'm taking the very, trend high there, and to the low, the 38% retracement comes in at 121.67, basically where we're at right now. I'm gonna write down resistance as being 122. I think this is going to be a probably decent resistance zone. I don't know if we're going to get any or enough, enough of a change in policy, if you will, because we're not seeing anything, but I don't think her comments are going to influence it so much where the euro, takes out 122, the 122 level or somewhere around there without, her saying something spectacular, which could obviously happen as well. But I think right now, 122 will be resistance. We have 122 to 122.20, which would be the spike high up here. And I think that's going to be resistance today. I do still think that the euro's in a range. Support now is at 120.80. We have 120.50 below that, and obviously I'd love to see a move back down towards 120, but that's not going to happen today. I don't think there's anything that she could say that's going to alter this range that we're seeing right now. And we're probably heading to the upper end of the range before the lower end of the range. So today, support should probably be pretty solid. And let me get rid of this really quick. I would think support's pretty solid through this trend line. So if we back it up to this trend line here, which would be basically 121, that might give you an opportunity to be on the long side if we dip back down there. Okay, but we are very much range bound at the moment. Let's take a look at, excuse me one second. Okay, let's take a look at the cable. So the cable's breaking out. We have a bullish wedge developing. Now, what I want to see in the cables, I'd want to see a close above 137 today. I mean, that's, you know, if we close back below 137, that would pretty much be a bummer for anybody who's long. Because you know, you'd have to think again, oh man, here we go. You know, it's another false breakout. So we definitely want to see a move above 137, I'm sorry, today. Support will be 136.25, just in the event that we do start to pull back. Resistance now, the 78% retracement. Now this is, let's go to the weekly chart. This is a 78% retracement of the 2018 high to the spike low in 2020. So that 78% retracement comes in just above today's highs. Basically, you can put in 137.50, and it's 137.54, but we'll write down 137.50 as being pretty key resistance day. We break that, and we should, you know, start our move towards 138. All right, it's bullish today. Okay, while we're up at these levels. Aussie. So the Aussie, you know, we held channel support, and so that means that this channel support is so important to the market right now. And that comes in at basically 77 cents. So I'm going to write down that with some asterisks.
And so much for the Head and Shoulders and Kiwi, huh, Blake?
Yeah, I took it off yesterday because you know, we took out this downtrend line here,
Okay.
and yeah, so that head and shoulder pattern, it's not theoretically negated until you get after above these shoulders here. But I took my loss because it, you know, when you came through this trend line and you saw the dollar weakness pretty much across the board, it's like, okay, well, you know, why sit through any more pain here? And, you know, a lot of times you have to, you know, take those losses. And yeah, that's one of those situations that it, you know, yesterday I closed out the pattern in play at 71.97 or 98, somewhere around here when that trend line was taken out. So yeah, it, you know, we thought we're setting up, but look, you know, after yesterday's rally in equities, you know, there might be a continuation. Now, if you look at the Aussie though, we do have this channel. Okay. So that means that, you know, resistance may be pretty important here at the 78 cent level. But if we can get above that, then we're going to 78.20, which would be the recent highs. Okay. And I think while we're above channel resistance or channel support, we have to be bullish while we're above this support level. Okay. It's only when you drop below that support level so that you have to, you know, flip to bearish. But for right now, that's it. Kiwi. So yeah, the Kiwi, you know, had bearish head and shoulder pattern. I was worried about it yesterday when we took out the 71.50. If you're in the chat rooms, I'm like, oh man, this is not good. But you know, risk assets just continued to blow up yesterday. So stocks continue to move higher. And I mean, I think the NASDAQ was up another 2% or the S&P was up 2%. I can't remember, but anyway, the New Zealand dollar should have some pretty good resistance at 72.40. I don't want to put bullish because I think we're more in a range here than we are in the Aussie. But it is, but you have to be careful being bearish here. I think support on dips back to 71.50 are going to find support now. Because if you were short, you're scrambling for cover, so you just want to be able to cover it if it dips now. Dollar CAD. So the dollar CAD, we slumped to new trend lows yesterday. We've been holding down here. I'm really actually quite surprised that the dollar Canadian didn't drop lower overnight. So, I mean, how many people did probably the trade that, like, when I covered the New Zealand dollar, how many people shorted the, the dollar Canadian saying, oh man, this thing's going to just absolutely, drop tomorrow. And the fact is that we haven't. And so if you're short, you're probably starting to think, I got to be a little careful. So I think in the event the dollar Canadian gets above this 126.50, you got to be a little careful. I'm going to keep it in range, but I think that's going to be pretty important today. And support, I mean, we have 126, but what we should do is do this. 125.70, 75, basically. Okay. Dollar Swiss. So we might actually get this head and shoulder pattern because we're at support right now. So that would mean the next support level comes in at 88.20 right here. We'll write 88.20. And resistance remains key at 89.20, but it looks like the Swissy is actually going to break lower here. Okay. US dollar, Norwegian krona, back down at support. Obviously, that was a really key, and I have to tip my hat to Catherine in our chat room. She nailed the short up here, and I mean that's previous support, current resistance. Your risk, and we rejected it pretty.
There's some talent in there, buddy.
Oh yeah. I mean, and she's in London, and a matter of fact, she won our Forex Analytics giveaway. She was one of the winners, although she had already been a client or part of the Forex Analytics family for the last couple of years. She ended up getting 3 free months on top of that. So
yeah. Nice.
Hey, that's cool though, right?
A lot of talent in the UK, female trading talent.
Oh, I mean, we've actually got a bunch of female traders in our room, which is great. I mean, we've got Amanda, who's in the UK.
Yeah, that's what I meant.
Irina, we've got
Selma.
We have Catherine, we have Jane, we have Steph Mo, we have Ange. She's in the UK as well. So
we have Steve.
We've got Stelios when he puts his wig on. Covers up his baldness.
It's a handsome devil. Come on.
Yeah, you know it.
All right. But anyway, yeah, a good trading group in there. Anyway, I just wanted to tip my hat to Catherine. So we have support. We're currently on support, but I'm not going to write down 841 because we're on it. Next support level is going to be 836. Obviously, the lows here. This has to be bearish. Well, we're below 864. Okay. Let's go to the dollar yen. So the dollar yen is trying to it tried to break yesterday through its triangle. well, it did break yesterday through this little triangle that we had, and I'm not sure if we did that, if I did that with you guys here, or if I did that actually after the fact in our chat room. I think that was it. Anyway, we hit 103, or excuse me, 103.50, and then last night with right here, wherever it is, where's my dollar yen? Could put the pair back at 103.29, which is the 618 retracement, right? And I think today's low is right about that. I mean, it's 103.32, so just a few pips off of that. You know, the dollar is just kind of bearish everywhere, so I you know, you can't rule out that a dollar move to 103 at this point in the dollar yen. So, and as you guys can see, is the currently is the 78% retracement. So we should find resistance at 103.70 on any rally. Last night we went to the 103.60s. So I still want to keep it in range. You know, we could put it in bearish, but I you know, it's hard to get super bearish when this is happening, right? You know, it just seems more range bound to me. Dollar index support will be coming in at right here at 90. We're at 90.10. I mean, we're getting close to some pretty key support on the dollar index. And then resistance is at 91. Although today I think you'd be pretty lucky if you got towards 90.60 actually, but I'm going to keep it in range though. Dollar Mexican peso. So we were just, remove that. We were, you know, this is very similar to the dollar Canadian, where, you know, you go, okay, well, I shorted dollar Mex just because it's below support. So I'm expecting a move all the way back down here to 1940. And then you get up in the morning, you're like, oh crap, it's not breaking down. So you just go ahead and cover. And I think a lot that actually happened this morning. You probably got a lot of people, you know, just in a hourly short covering rally here. I don't think we can really turn like it looks like it's going to squeeze until we get above this, let's just call it 1972. I want to put it in bearish, but I'm not going to today, just because, like I said, we're not getting followed through to the downside. So 1954 or 1955 is support for now. Take a quick look at gold. So gold actually got a lot of people bullish yesterday, and you guys know with me, I'm not super excited about gold. I was actually talking to I had a conversation last night again with Chris Weston, and we were just talking about gold. It's like, okay, in this environment, why would you want to own gold? You know, with stocks moving higher, if you know the Fed and other central banks don't feel like inflation is going to be an issue, why do you want to hold a non-yielding asset? Now, Stelios and Steve probably have opinions about this, which
Yep.
yeah, hold on. I know. I just want to say, hold on. But as stocks continue to climb higher, I don't see the reason to own gold. That doesn't mean that we're not going to get. That doesn't mean that we're not going to, see the market stall, like stocks stall and inflation start to rise and gold go up. But I'm if you're wondering why it's not going straight up right now, I think as stocks go higher, it is going to be a headwind for gold. and frankly, just technically, I don't even know how to play it right now. I mean, I look at it and it's like, okay, what do you do with that? You know, I do know that, you know, we have supported 1800 now. That's the spike low here. Resistance is probably closer to 1900. And while you're in this range, I mean, again, you can have your opinions on what you think gold will do, and I'm gonna love to hear Steve and Stelios's opinions on gold here in just a second. But I think technically it's a tough. Oh, we did just get data, but it's not moving the market.
We had data, by the way, Blake. You saw it, right?
Yeah. Initial jobless claims a little bit better than expected. Housing starts. I mean, housing starts. We have a housing shortage in the U.S. We definitely do here where I live, but it's a big housing shortage, and you know, I think the big reasons why obviously is just the rush to work from home. People know that working from home is going to be more permanent for a lot of other people. You know, everybody's trying to upgrade. You know, it's like I want to get a house with, you know, an office versus not because I'm working from home. You know, all, you know, so people are trying to upgrade while the rates are so low. That's the whole story. But inventory, especially where I live, oh my gosh, there are the fewest amount of homes for sale in 20 years where I live, which is just wild. But you know what's going to happen is all this building's going to happen, and then we're going to get then it's going to become oversupply at some point, but that's not today. All right, support for the S&P is going to be, we're going to write down 3830. For now, and below that, you know, we got to write 3747 or 3750. Now we are in a bullish trend because we're in a bullish channel, right? The problem is we're at the upper end of our channel. We could blast higher, you know, towards 3,900. That obviously is a risk, but as you can see, the channel's been holding the market, so it's something that we have to. I think for now we have to just pay attention to the highs, which comes in at 3870. Okay, I will write 3,900 beyond that, but if you look at yesterday's analysis, you know, for our bias chart, S&P, 3820. Whoops, hold on really quick. Okay, 3820 was resistance because that was the highs. But if you go back a couple of days, we also noted the channel resistance at 3860, I think is what we had written down before, and now we're at 3870. So just keep that in mind that this is an ascending trend line, and so every day that resistance moves up just slightly. All right, guys, so here's your bias chart. Now let's hear your opinions on gold and silver, because, you know, guys, I typically, I'm not around to hear all your analysis because I go plug into my conference call for my trading office. So I don't get your opinions all the time. Stelios, what's your opinion on silver? I know you. I
have an opinion, obviously.
You do.
What you said about stocks being headwind, that is perfectly true. The question we need to ask ourselves is, why are stocks going up? And I think this is slightly different than where we were in the last 10, 15 years, where you had stocks going up because things were going great and yields were going higher. And that's why usually gold and silver were saw a headwind. I think on this occasion, I think we can agree that stocks are going up because of monetary supply. And
inflation.
Just
inflation.
FYI,
Yeah.
Lagarde just said she's monitoring the exchange rate for impact on inflation. So
yes,
she's actually speaking. So but
sure.
Okay, I'm sorry, Stelios, I didn't want to interrupt you, but
no problem.
No, so again, why you were just talking about why stocks are higher.
Yeah, and in my opinion, obviously we do have the vaccines and all that. That's going to have a positive effect. But hey, wasn't all this priced in when we're at all-time highs before a vaccine was out? So I think that's the reason why we're going up. And if the reason we're going up is monetary supply and inflation, surely metals should be always also going up, and basically all real assets should be going up, or most real assets. So that's my view. I think we will see maybe a short-term headwind. I'm hoping for one. As everybody knows, I'm waiting for a 22 handle to get long in silver again. But I think the trajectory is higher, end of story, in the long run.
All right, and Steve, do you when I mentioned about gold, you did have an opinion there. So what's your opinion about gold?
First of all, gold doesn't care about yields. Gold cares about real yields. And I think that we can clearly see from inflation expectations picking up, and the fact that every single central bank has admitted that they're looking for higher inflation and they're not looking to actually do something about it when it comes, because of what they now photograph as, like, they want to achieve like a symmetrical target without giving even a time horizon about, like, okay, you want it to be symmetrical in how many years or whatever, which is anyhow nonsense. I've explained that. I mean, theoretically speaking, central banks began by saying that they don't want deflation for X, Y, Z reason. I disagree with all of them, but let's say that's a fact. Now, a year that has already gone by and you did not have inflation is a year that you achieved your target. How exactly do you want to compensate for lower inflation, since low inflation is a good thing, but you claim that you don't want deflation? A year that passed with no deflation, you succeeded. So next year, your target should be not to have deflation again, which we haven't had deflation, God knows for how many years, right? We never actually had deflation, with the exception of a few months in the financial crisis of 2008, 2009. So basically, real rates, the path for real rates remains lower. So hence, the path for gold and silver remain higher. And it's exactly what Stelios said. The same factors in this case that are driving stocks higher and bonds higher are the exact same factors that will keep driving gold and silver higher.
Got it. Okay, so let me ask you this before I flip over and let you guys go, or I'll let you guys give your thoughts on the markets here. As far as deflationary pressures, do you feel that is more a risk, or do you think inflation is more a risk? When I say near term, I should say within the next 12 months. What do you guys think?
First of all, deflation is not a threat. Let's begin by debunking the theory that all of those people that try to sell us all these ideas, like bright ideas, have created like common sense. Deflation is not a threat. Deflation is the natural evolution of capitalism. The natural evolution of a capitalist system is to make everything better and cheaper over time.
Yeah, the threat really is runaway deflation, or how do they call it? There's have another name, the spiraling deflation or something like that. That's never going to happen with monetary supply expanding the way it is. So do we get? Do I think the risk is higher for inflation rather than deflation? Well, I don't think we'll ever get deflation, proper deflation. So I think we will get inflation eventually, depending on how they measure it.
Yeah, we have some natural.
Do you think that inflation will probably continue to creep up at 2% annually?
They will do whatever they can to reach that. They are doing whatever they can. The amount of asset buying and all that, it's ridiculous.
Yeah, and by the way, inflation is anyhow higher than 2%. It has been for a long period of time, and that's not a conspiracy theory. All of us, I mean, the vast majority of us here, we're not like 15 years old. We've been around a long time to actually know and feel how much our money have been losing their purchasing power over a year. Is there honestly any single one of you that believes that during the past almost 15 years your money has been losing, let's say on average 1.5% per year? Honestly, any of you?
Bueller? Yeah. Anyway, it's a long conversation, but
Yeah.
yes, I agree with you.
All right. Well,
Okay.
hey guys, I'm going to let you guys continue on your conversations about the markets. I know we have a guest coming up. Dale's got a guest coming up in, he's got Bruce coming up.
Yeah, and for Wyckoff advocates, that's Bruce's bailiwick.
You know what? If Bruce is listening in, I'm a big fan of the Wyckoff strategy. So the accumulation distribution Wyckoff strategies. So they're not as easy to find when you're only trading so many asset classes or so many pairs. But I am a fan. So it should be a really good interview.
I'll have him send you an 8x10 glossy of RD Wyckoff.
Great. All right, guys.
I think that was his
Steve,
name.
Stelios, have a great one. And guys and gals, let me
You too,
just mention
Blake.
again, if you haven't taken advantage of our pricing special that we do only a couple times a year, it's only good for 4 more days. So 4 more days. Now, when you guys have been around long enough, when these prices disappear, you're not going to see them again for a while and months. So take advantage of it. And I'll let you go. I'll let you take over from here.
Bye, mate.
Thank
Thanks,
you, Blake.
guys.
4 more years. He said 4 more days, didn't he? Okay. Bad joke. Sorry. All right. So, hello, everybody.
Hey, Stel.
We talked about a few things.
Hi, Mike.
We had the ECB today, and my dog actually has something
Yeah,
to say
hi,
about
Mike.
it. Yeah. We had the ECB today. They, there was nothing new. They left deposit rate at -0.5 and the main refi rate at 0. They reiterated the same thing. Rates are going to be at present or lower levels until the inflation goal is near. And guess where inflation is? -0.3% year on year. That's like a million miles from target. Then they affirmed the size of the pandemic purchasing program, blah, blah, blah. Basically nothing new. I'm monitoring for anything that Lagarde says. She just said that the downside risk is less pronounced than it was before. Clearly that's true because of the vaccines and all that. But anyway, and she also just said inflation is likely to increase in coming months. So nothing new from them. We did have Joe Biden taking over as US president. And he's already announced some things that he wants to change straight away. First of all, the Mexico border, the wall. He basically ordered a stop to the construction. And that was one of the most popular things I think that Trump did when he came into power.
We still have a wall, Stel, by Pink Floyd.
Oh, I love that.
Yeah, that's the only wall I'm interested in.
Yeah. And so
to be honest, as an outsider, I never figured out why the wall thing at the border is an issue of contest.
Yeah. Well,
you mean you think we should have one all the way across that border?
I don't know the I don't know the exact details and how much it would prevent. I've not done an analysis.
They do
but
tunnels.
Let me take it oppositely. There is no serious counter argument in having a wall in a border. That's what I think as an outsider. Okay. And you know very well that I've disagreed with Trump on a billion things, right? On a billion things. Yeah. So it's not like, I'm like, whatever Republicans say, I say yes, or whatever Democrats say, I say yes. I just judge every issue, completely separately. So I don't really see any reason why not to have a wall, but whatever. I mean, you guys decided about it.
Yeah.
Okay.
So that Biden is already announcing a few things that he's gonna undo than what Trump said he did or said he was gonna do or has done. And just to answer, there's a friend who said, "Oh, Biden is this, Trump is this." I don't support either side. I just report things as they are or as they come. And I know I'm not an American. I don't have a view. I just want the world to be safe and things to be going in the right direction in terms of economic growth and development. That's what I want, or I would like. But anyway, that's what Biden is doing on his first day. And
He also issued an executive order about rejoining the Paris Accord, Stelio.
yes, that's in my opinion, that's probably a good thing. You want to be, the United States is, arguably the most important country in the world, and you want them to be a part of that, that whole the whole movement. And climate change is important, etc. So I think that's good. But then again, it's my opinion. So what else did we have? We have Lagarde speaking. We had some numbers today. Australian employment came in exactly in line. BOJ, nothing really to move the needle. Norges Bank rates unchanged. Quite boring, actually.
Yeah.
Housing data in the US was a little bit better than expected, but really not enough to move the needle. Jobless claims the same. Nothing. We have New Zealand CPI later today. That's in a few hours. That's going to be important. It's always is, because New Zealand's commodity currency. The Kiwi is a commodity currency. They rely a lot on dairy and meat and stuff. So that's pretty important. But otherwise, that's it from me.
Okay.
buddy.
Thank you, mate.
My
Thank you,
pleasure.
Thank you, my friend.
Okay, so what do we have today from technical developments? I'm going to be brief because we can, we have like 15 minutes. We can examine several stuff. To begin with, the Euro USD's rebound from the confluence we were talking about yesterday and the day before yesterday continues. So yesterday we pared back the losses. Most of them actually, and today it's again a positive day. So this confluence of supports seems to have done the job for the time being. So it is important, and I do think that as long as we are above it, there is a good chance that the euro is going to continue higher, especially since, as more or less Stelios said, and I didn't expect anything different. I don't think we're going to get anything from the ECB today that's going to be groundbreaking, or that's going to be changing investor opinions. So keep that in mind. At the same time, the cable is testing, yes, once again, this triple confluence of resistances. So an important pivot area in essence. I think if we do manage to break higher from here, we can actually accelerate higher. But on the other hand, we might get rejected once again and finally see a move towards the bottom of the channel, because we've been flirting with the top of the channel for quite some time now. Of course, that would more or less require some generalized dollar strength. For that to come, we more or less need to see some tapering of the extreme optimism for risk assets. For the time being, that doesn't seem to be the case. We're once again flirting with a breakout from this ascending wedge, more obvious here in the Nasdaq than in the S&P. But for the time being, it is not big enough, so it can easily just be an overthrow. What I did pay closer attention to, though, yesterday was this, which is the FANG index, which actually gapped higher from this consolidation and closed near the highs. And we know how important these stocks are for driving equities higher, especially having to do with the Nasdaq, right? So, I think it might be an important leading indicator in this case, especially if we hold today, if we don't make something extreme like an island reversal. For those of you what that is in candlestick formations, I think it's going to be probably quite an important break higher. At the same time, the VIX seems to be trying to break down in this case, from this recent consolidation and the support trend line. So, these two happening at the same time will probably point to further gains. And as I've said some time ago, don't exclude the possibility of a last
Blow off.
blow-off type of move before we see a deeper correction. It is a possibility, right? It is a valid possibility.
Everything is.
Yeah, especially under current circumstances, right?
Yeah.
And even if you look at, for example, commodity currencies, which we know how well they're correlated with risk, just look at the recent consolidation, for example, in the
Aussie, yeah.
Aussie. Just look at this.
Yeah.
Right. Does this look to you like something that's about to break lower?
No.
Here's the Kiwi. Somebody can see here a flag. Let me show it to you more specifically.
Well, that. Mhm.
Or a pennant. There you go, right?
Yeah.
Let's have a look at crude.
Stalling a little bit, buddy.
Stalling, but
Still in an overthrow. Would you commit to it back inside the wedge, Steve, if we got back into it, short it?
you see here.
Yeah.
So why not something like this, right?
Yeah.
So, in essence, I was warning for caution when we saw that move higher in the DXY. If you remembered, I kept warning that be careful because so far the DXY's move is mostly due to the euro, and the rest of the currencies don't seem to be following, especially commodity currencies. They just had subtle corrections. Just as an example, look at USD SEC, got rejected from the channel. USD CAD got rejected from the trend line. USD NOK seems to have had a false break higher. Thankfully, I didn't close any part of my position because of this on the 4-hour chart. I was monitoring this channel, and I said to myself, if we get an overthrow from this channel, then I'll know that this is not like a shallow correction, so I'm going to close it. So I didn't, and we've actually broken down from this now. So we're looking likely that we're going to be posting new lows. Now, none of that changes my general thesis, which has been and remains that everything is extremely overdone. The fact that the path of least resistance remains higher for stocks and lower for the dollar doesn't mean that we are at levels that are appealing for you to sell the dollar and buy stocks, right? We're not. I mean, this is a very mature move. It is in desperate need of a proper correction. I think it's likely that it's not going to come like immediately, but I think it's going to come, rather short. Now, of course, by using time terms, I mostly use, of course, my personal bias for time horizons. So, for me, like rather short can be a couple of weeks, right? And not like a couple of hours, because for some people, rather short is a couple of hours, but that's not the case for me as a trader. But until any of that happens, you have to respect what we have in hand here. And what we have in hand is that the main theme that we left 2020 with is maintained and remains as we speak. Now, having to do with metals, I'm still a little bit torn here because silver is still managing. I mean, first of all, both of the metals had a rather good day yesterday, right? In the case of silver, it remains above the broken channel. In the case of gold, it remains within the channel. So, I'm still 50-50. Are we going to see one more push lower and then higher, or can we just go straight higher? I think we might see one more push lower. I mean, I lean slightly towards the possibility of seeing one more push lower before we go higher. But for me, going higher is more or less inside me. It's a given. I mean, I believe that this is an amazing environment for metals, and they're going to keep signing. Now, Platinum doesn't really care about it because Platinum is actually, as we speak, at multi-year highs. So keep that in mind. It's overperforming. Palladium remains in hypnosis. We've explained all the reasons. Copper still holding within this ascending wedge. So no real developments there. Having to do with, since we mentioned them early on, having to do with yields and, for example, treasuries. Listen, admittedly, if we go on the 4-hour chart, there we go. Admittedly, I think that the whole move lower is corrective. Now, the problem with corrections is that it is very, very hard to exactly time them and know when they're going to be over. Examining actually at the lower time frames like the 4-hour chart, I have to admit here that this looks to me like a bearish pennant, right? So I do think that eventually like bonds are going to be pushed, and I say pushed because this is not a real market anymore. We've had this discussion multiple times in the past. I think eventually they're going to be pushed higher again, but for the time being, I think that the path of least resistance in the short term remains lower, which would also bode well with the theory that perhaps we're going to get another move higher in stocks, another move higher in the another move lower in the dollar for the time being, right? Which means that yields, which is the inverse, look at yields here. Yields, which are the inverse, are probably about to push somewhat higher once again, right? So I think all those more or less align decently with each other. Now let me see if we have any questions we have time to answer. I think we have like 3 minutes. I did count 4,000 for S&P on my year ahead video. Looking at platinum, where's the next target? Where's the next target in platinum? It's this confluence of resistances at 1170 there. So we're quite close to the next target, if that's what you're asking. The trend is up until it's broken down. Nothing confirmed to go full on bearish yet, in my opinion. Yes, exactly. That's my point.
What was that last chart you had up there, Steve? XR.
Which one?
Oh, the XPT is, what is that?
Platinum.
XPT. Oh, platinum. Okay.
Yeah, it's
Okay.
platinum. Natural gas, since we mentioned it again yesterday, still being pushed lower. We discussed yesterday possibilities here. I think the possibility is that we're going to see perhaps even a lower low before we move higher. But I remain of the opinion that this is a bigger corrective move, so keep that in mind. 220, 223 is the first area of support of real interest, and the next one is like 205. So keep that in mind. And I do maintain a bullish medium to long-term bias. So I think here as well, more or less, as you see, natural gas looks very similar to gold, right? Very, very similar to gold. And I think both of them are going to have the same outcome, right? I mean, they're going to finish probably sooner rather than later their complex corrections, and they're going to resume the upside. So I do think they both will share the same fate, more or less. And, not for unrelated. I mean, some of the reasons are totally not unrelated to each other, right? I mean, some of the reasons are going to move in tandem are completely related to each other, some of them not. Let me see if we have any more questions. Is your guest here, by the way?
Oh,
Dave?
yes. Bruce was early, very early.
Okay.
So,
Okay. So, we're actually at the top of the hour. So
okay.
I think we covered enough stuff today.
All right. Bruce, I'm going to get you set up now to be a panelist. Welcome to Face, Bruce Fraser. How are you, buddy?
Hey, great to be here.
Really pleasure to meet you, Bruce.
Thank you, Dale. Well, I'm excited to be here. I'm thrilled that we have a chance to talk about Wyckoff
Okay, and
or
you
anything
answered.
else you want to talk about.
You know what? Do you know how to share a screen on Zoom? It's the green screen share button. And you
No.
already answered a question for me because, you know, I called it Wickoff and Blake called it Wyckoff. So now I know the correct pronunciation of it. So,
Well,
yeah, if you could share your screen, you see
sure.
the drop down menu on share screen.
Share screen.
So you and I have been around for a while, haven't we, buddy?
We have. Can you see
Okay.
my screen there?
Yeah, I got the weekly Wyckoff market discussion application.
Beautiful.
So before we get going on content and your cartoons, nice, creative guy. So, you know, I found a lot of creative people that came in to be traders. They find ways to express themselves in this business, the creative side, instead of, you know, just being number crunchers. And sometimes that comes from where they started and how they got into the business. So I'm going to test your memory here today, Bruce.
Oh,
Yeah,
gosh.
yeah. Tell us what you were doing before your first entree into the trading investment arena. Was it something that you knew early on you wanted to do? I know a lot of people, their fathers were traders. You know, I knew a lot of my friends, their fathers were at the CME, so they ended up in the business. How did it happen for you?
Well, it's my family. My family business was horse racing,
Oh,
and
wow.
so I started at a very early age. Absolutely fell in love with the tracks and horse racing and all of the interesting people. And that was my dad's business. And so I don't know, I was like 7 or 8 years old, and I'm like, Dad, you got to put me to work. And so I spent the next 20 years working in and around racetracks, up and down, really around Central and Northern California.
Oh, okay.
And so it was just a great, as I look back on it, it was a great experience for me relative to the financial markets. And it was, I got to know a lot of really interesting people. I had the great fortune of working at Bay Meadows Racetrack. And eventually I had been working as a young man there so long, I had seniority. So I was able to get a really good job working in the Turf Valet parking lot. And so I was right in front of the Turf Club, and I met all the really interesting people that came in and through the Turf Club, which was pretty amazing.
Did you bet? Were you
Oh,
a
for
better?
sure. Yeah, you can't
Okay.
be around the racetrack and not. But I learned a lot, and one of the things that I learned early on was I started doing the math on probabilities, and I picked up a book as a kid, early teens. I started looking at probabilities, and I realized what how low the probabilities were of success in horse racing, and I felt that I was very fortunate that I was able to take home a paycheck every day from the racetrack. And so I stopped gambling. But the other thing that happened was that I got to know some of the really best handicappers in the business. And these people, men and women, showed me what they did and how they did it. And it's amazing the parallels to
Trading.
financial markets.
Yeah.
And so, for instance, just as a simple example, is one of the things about great handicappers is they handicap all the races, and they actually participate, bet, gamble in very few of them. And these are only the ones where they feel like they have improved the odds in their favor. And one of the ways that they've improved the odds is that they see horses that are very good horses that are mispriced. And so that means that their odds are higher than they think that they deserve in the race, meaning that they have a good chance of winning. And the marketplace, this is pari-mutuel wagering, so all the other gamblers have underestimated the value of the horse in the race. And so tell me that doesn't sound like financial.
Yeah, like kind of a contrarian value that no one sees except the experts.
Exactly.
Value investors and so
Yes.
forth. Okay.
So anyway, so what happened to me was that I had worked my way after graduating from college. I worked my way into a management job at the track, which was a lot of fun. And I really felt that I was just going to spend my whole career in horse racing. And then this was in the early 80s, 1981. I was working towards my finance degree, graduate degree, and in San Francisco at Golden Gate University. And my professor said to me, he says, this is a course that you absolutely have to take. And this course was technical analysis, graduate course, technical analysis taught by Dr. Henry Pruden. And Hank Pruden was teaching the only graduate course in technical analysis at an accredited university in probably the known universe. And so here
what was the
right
textbook, Bruce? What was the textbook?
It was Martin Pring, Technical Analysis Explained. And in later on, Martin Pring became my business partner. And I just thought he was a god. And I still do. I just absolutely adore him. He's just a great person in my life, and we collaborate a lot, and we're good friends. But at that time, I just had his book, and so anyway, with Hank, I was taking his class, and like 2 or 3 classes, sessions into the semester, I had made up my mind that this is what I was going to do the rest of my life. I absolutely loved it. And the thing that I loved about technical analysis and charting, chart reading, the whole thing, was that there was a probability bias in technical analysis that didn't exist in horse racing.
Yeah.
You could never really improve appreciably the odds in horse racing, but you can through a great methodology and approach and good risk management, you can actually create a positive probability bias in the financial markets. And the bet sizes are just significantly larger. So in every way, I saw this as being the better path than the career I was in. And so I'd made up my mind that when I finished graduate school, got my finance degree, that I was going to go into the financial industry. And that's exactly what I did. So I've been
Did
doing
you start off as a broker somewhere?
I did. I was at Dean Witter, retail broker, just on the northern edge of Silicon Valley, which was very, very interesting because I was there for some very interesting times, and also had a number of people out of the valley that had very successful careers and had been in critical startups and so on. So I learned a lot about the way Silicon Valley worked in my career there. And then the other thing was I had Hank and my other business partner, Joe Turner, as great mentors to me. And they really taught me how to be a really good broker for my clients. And so they helped me develop a business plan that really worked for me. And what happened was, and my goal was eventually to get sort of across the street, to go from being a retail broker to being a portfolio manager. And as a consequence of that, I was literally, as an entrepreneur, started 2 very successful investment advisory firms that I worked in for many, many years. And my partner in one of those firms was Martin Pring and Joe Turner. And so that was what put me on the other side of the street and had me becoming a portfolio manager.
You
So-
really were fortunate, Bruce, the journey you had and the connections that you made. I mean, having a guy like Martin Pring, I really have respected his work, the progression of the economy and how certain sectors at certain times outperform or underperform. And, you know, you really, I mean, compared to now, to what people have to search through and discern and due diligence to find true mentors, and you know, not just someone
Yes.
trying to get into their pockets. So yeah,
Well-
we were lucky in those days. I know I had the exchange floor of people on the floor whose brains I could pick for
Yeah.
quite a few years. So
Well, and
great
what-
story, Bruce. You
Well,
really
and one other thing that happened for me, just to put a bow on it, was that Dr. Pruden had developed this great class at Golden Gate University. And in 1987, he decided he was going to go on sabbatical. And so he asked me to take over this class. So I was teaching this graduate course in technical analysis, which was a survey course of a number of different methods and techniques. And
did you use Edwards and McGee?
absolutely, that was
my Bible.
that was the first book I had, and I took it with me wherever I went. And Charles Bassetti, who now edits the Edwards and McGee series, is a dear old friend of mine, and he is a teacher, adjunct faculty at Golden Gate University, or he was. And so I've had the great fortune of being able to spend time with him. He worked with them, and I was able to pick his brain a lot. So that was very fortunate also. But I spent 30 years teaching graduate school at Golden Gate University in technical analysis, and we taught courses in many different subjects. And the other thing that we had is we were kind of the hotbed of technical analysis really anywhere. And so we were the epicenter at Golden Gate, and all these amazing people would come to San Francisco and come through the university and teach and give lectures, and I just wrote down a few of the names of people. Dick Arms, who was a dear friend, Bob Prechter, Justin
Yeah.
Mamus, Joe Granville. Joe Granville's somebody I was able to spend a lot of time with, and I think he's one of the geniuses of technical market analysis.
I remember
And-
one of his famous statements was, "What is most obvious is obviously wrong."
Yes, and
Huh?
he had created incredible indicators that many of us, we use
Still,
these indicators and we don't know the origin of them. Well, a number of them come from Joe, and
Yeah.
Joe was very kind, spent a lot of time with me, and so the community is just incredible. I mean, they just love to give back, and
it's still that way.
it's still that way. Yes,
We're an example of it right now.
absolutely. And
Okay.
so anyway, I don't want to go on and on about this, but
It's a great. Have you written a book yet? You know, My Journey in the Business. You have a book, and you. I'll put you together with Schwager, and maybe he could help you out.
Jack came to as soon as he wrote The Market Wizards, he came to San Francisco and spoke at Golden Gate University, and he's been a very generous person with us in terms of sharing his time and experience with the Market Wizards.
So, how did you gravitate towards the work of Wyckoff?
Well, probably the best known Wyckofian was Hank Pruden. And
Okay.
Hank was teaching all of these different methodologies, but he really, in his heart and soul, he was a Wyckoffean. And he would teach a lot about Wyckoff in his courses. And so I just immediately gravitated to that. And then I did my graduate thesis for him, and we did it on an attribute of volume using the Wyckoff method. And we were able to get that published in the MTA Journal. So that was like one of my early experiences, and I've just been a Wyckoffean ever since. And then in 88, in 90, Hank and I started teaching a graduate course in Wyckoff analysis, and we taught that for 27 years.
So you
Together,
probably
team taught it
spawned
mostly.
you probably spawned many traders over the years.
There's no
that you-
question. We've taught probably in the thousands,
Yeah.
Wyckoff method, and they're out. And even now, we can even reach more people through this incredible technology today.
Any of them end up, I have a belief that, and Jack's last book proves it, that the most famous aren't always the best. They may be the greatest marketers, but it doesn't mean they're the greatest in the market. And,
Well,
Jack's recent book of unknown market wizards.
yes.
Did you spawn any that reached any kind of notoriety like Richard Dennis's Turtles?
A number of them have achieved very high levels of market performance. And, I'm not going to reveal any names,
Okay.
but in many, many cases, they don't really want the
Yeah.
notoriety. And the thing is about the Wyckoff method is that it's a whole philosophy that's built around really sort of obscurity, because the actions and the activities of what we call the composite operator is to make their trading and investment decisions in the markets and not bring attention to themselves. And
Okay.
so I think that they take that to heart. Now, one of the best Wyckoffeans that I know is actually a student of ours in the 90s, and this is Roman Bogomazov, and he's an incredible trader, but
Okay.
he's also a teacher. And so this is his website, wyckoffanalytics.com. There's a lot of good content here. He publishes my blogs and my video
Okay.
blogs, which really I do those at stockcharts.com, but there's also a lot of other great
I
content.
noticed that you're on there, and David Keller and Grayson Rose, and
Yes,
I was curious if we could, before we get to this framework of
sure.
Wyckoff, your cartoons that you had up there with 2021, big investment themes for 2021. What are you trying to say there on the left and on the right?
Well, so here is I think a condition that exists in the markets now is that you can see up here this wagon with everybody on it, which is national prosperity. And
Okay.
the national prosperity, which is really the economy and so on, is lagging way behind the stock market boom. And this is typically how it happens, is that the stock market goes first, has a big run, and the economy is weak and listless, and it just sort of tries to find a way to get in gear and go. And so this is just representing the fact that the stock market is often out of phase or out of gear with the economy. And as a matter of fact, it's typically the case.
Yeah, it's a question that, since the COVID crash in March, that I've gotten from so many people, Dale, why is the market doing so well when, we're on life support and the federal
Yes.
government is sending out checks just so people could stay indoors? And, it's not easy to explain to people that it could be a monetary phenomena that may not translate to the real economy.
Well,
How do you answer that question when I'm sure you've been asked, Bruce, why is the market exploding to the upside with, you know, millions of people filing for first time unemployment claims? What do you
sure.
tell them?
So this would be this is my roots working all those years with Martin, and how the economy actually works is that the economy and the financial markets are actually in competition for capital. And so the
Interesting.
economy actually, if it's somewhat listless and doesn't need a lot of capital infusion, then as you have a profligate Fed that's printing money and pumping liquidity into the system, that liquidity isn't needed in the real economy. And that's how economic expansions begin. And so that money migrates its way over into financial markets and speculates.
Okay.
And so then what happens, and we're starting to see that now, and if we have a chance, I'll show you some charts, is that we're
Sure.
seeing the increase not only in the economy in 2021. So there's a great potential for the economy to get better simply because of the liquidity, which is what the Fed wants. But the other thing that creates competition for capital is inflation. And so as inflation heats up, the cost of goods and then speculation in goods and materials, that also can rob the traditional stores of value, which is the bond market and the stock market. It can rob those markets of liquidity, meaning that money migrates away. Money's fungible. It goes where it works the hardest. It goes from the stock market and works its way over into
Commodities.
other asset classes.
Yeah. Yeah. The grains have been
Well,
on fire. Hard to find a chart that isn't in a bull trend, except
exactly.
maybe the bonds, right?
Except for the bonds. And of course, the bonds are now reflecting the fact that interest rates are going up, which tells us that there's demand for money. And this demand for money is coming somewhat from the real economy. So we're starting to see the evidence of the real economy starting to compete with the bond market. Stock market and the economy can go up together and typically do for a period of time. And so we would expect that that would be the case going forward, is that we're going to start to see better economic numbers, and the stock market will like it. May not be
Okay.
so good for the bond market.
Okay. Is there also a chance that the real economy could start to do better next year, and that the stock market doesn't give us the same performance it gave us when the economy was still struggling?
Typically, yes. Typically what happens is that you start to see rotation. You start to see it becomes a more selective market. Oftentimes the stock market will sort of lose its trajectory, meaning the advance will slow down somewhat on the way up. And so you'll still have positive returns from the stock market, but they may be, sort of the easy low
Compressed.
hanging fruit
Yeah.
is early in the uptrend, which is what we saw here in 2020.
Okay. Well, let's get to the charts that you wanted to show today, Bruce, and tell us what you're seeing.
Well, this chart, just to set up sort of the condition for Wyckoff, is that this is just the classic life cycle model of the
Pring.
stock market. It could be any asset class, really, and it can be any time frame, because the markets are fractal, as we all know. And I saw some great examples in some of the charts that were being put up before I came on. But there are these phases, and one is, and this is the really important art of Wyckoff, is that you have the accumulation phase that comes at a cyclic bottom, and in the process of building or accumulating shares for a markup. And so who's accumulating shares? Well, it's the composite operator. These are the super shrewd, smart, value oriented. These are like the handicappers we talked about. They're buying good assets at bargain basement prices, and they know exactly what they're doing. And so we see here, and this is sort of the Wyckoff labeling of an accumulation. The other part and is these pauses in the uptrends along the way, which we call reaccumulations. And so this is the process. Bases don't happen willy-nilly. They happen for a reason. And the reason is that you have large informed interests that are basically absorbing all the stock that's available. And when they absorb that stock that's available, eventually it becomes very difficult to buy. And so the early adopters of this theme will lock up the shares. And the only way that a large institution who's not an early adopter can own these stocks is that they have to be willing to buy on a scale up, because
Where
they're
do
so
where do you
difficult.
think we are in 2021 on this graphic that you have?
Well,
up here?
I'll actually show you a chart here, but I believe that we created a big accumulation back in March,
Right.
and that we're in the markup phase. And I would say that we're like somewhere maybe right in here, and that there's still more upside. Now, this is a truncated view, so you could have a series of these reaccumulations on the way up.
Okay.
And so, and then eventually you get what is distribution. These are the large interests that bought at good prices, held them for a very long period of time, and now are disgorging their shares very deftly, carefully. They're selling their shares at an average price up here because they feel that all the value has been revealed in that position. And then the stock is typically considered to be in weak hands after that. And that creates downtrends. So let me give you an example of this. So this is just this is Shake Shack 2018. And so you can see here that we identify these different phases of accumulation. This is one of the genius aspects of Wyckoff, is that every one of these phases has a different price volume characteristic to it from the prior one. And these steps along the way tell you that absorption has taken place, it's nearly complete, and that once the absorption has occurred, you can see that there's a total change of character here in the way that the stock trades. And it just goes into this vertical climb and then has a pause or a backup, often called the last point of support, and then another vertical climb. The only thing that can cause that is the fact that the stock is very difficult to buy and institutions want to own it. Now, what happens is in a downtrend, the stocks in a downtrend, the stock is in weak hands by definition. And eventually there comes a value point or a price point where the large interest, the composite operator types, will start to accumulate these shares, and the stock is systematically taken out of weak hands and put into strong hands. And so once you've done that, absorption has occurred. The stock, even though you can't see it in the chart, and this is the trick of it, is that you're looking at it anecdotally in the way the chart's trading, but this stock has a different composition of ownership over here than it does over here. And this is what allows it to propel itself upward at a very high rate, fast rate. And then here, the other thing that we do in Wyckoff is we do horizontal point and figure counting. And this is an age-old technique. Point and figure charting is maybe the oldest charting technique.
Yeah,
and
all the floor guys used to do this, have clerks doing their X and O's for them, right?
I had many floor traders that were dear friends. I would go down there. They had these little like cards that they would hold, big stack of them, and they were just for doing point figure charts. because it's just easier to do point figure charting on the fly than it is to do vertical charting. The other thing you can do is that you estimate the potential of the upward move of an instrument, stock, index, etc., by counting the horizontal count area, this is the accumulation we just evaluated. So we know stock is in strong hands throughout this. So we count back, and this gives us a count 70 to 76. This larger count goes 123 to 130. And in fact, it went right to, if I remember correctly, $70 and touched that. And that was the high point. Now, here's a current example, Molson Coors, and this is a stock. We do a little stock selection newsletter. You can read about it at the website. But here, just right before the test, there was a spring, and we profiled the stock in our letter. And then it came down for a test of the spring, which is typical and expected, and look at the vertical launch that's occurred since then. And so this really shows that everything that occurred over here from the climax onward was accumulation of shares. And so now Molson is just up and out of this accumulation area, which means that there should be the initiation of an important uptrend.
Okay, beautiful.
Yeah, so here, this is just a distribution schematic. We have a number of them, but also importantly, by the way, I did a video that's going to air today on stockcharts.com, and it's Your Daily 5, and they have a different person every day. But I do a little mini 14-minute workshop on reaccumulation. And so it's free, no charge. And it's after the initial airing, they put it on YouTube. So
Yeah, so what you label reaccumulation, Edwards and McGee would say that you would be looking for continuation formations like bull flags and triangles and
yes,
against, not reversal formations like descending or ascending triangles. So, yeah,
yeah,
so
and
go ahead.
it's all the same principles. I would say
Right.
the one thing that maybe Wyckoff does differently is the way that he broke up the consolidation areas into different behavioral concepts. Very
Okay.
ingenious is
Mhm.
the way that phase A trades versus phase B versus C, and so on. And so we spend a lot of time when we educate on Wyckoff teaching the student how to differentiate between the different phases and how to see them in real time. And so we do a lot of work on that.
Bruce, I bet that you and I could talk for hours about this, and I'd love to have you come back. But what would you wrap it with, and what would be the most important advice you could give to anyone in the markets?
Well, just to show this is a chart of the S&P 500. This is the
Yeah.
cyclic accumulation that occurred. We can see it on a point figure chart.
Yeah.
And this is the count objective that we get. So I just show this to show that there is the potential here. And in the reaccumulation, this is an example of counting reaccumulation. And this count more or less confirms this count, that in the very nature of the base itself was the indications of how far up the market could go. Now, that doesn't mean it can't. Yes, and that doesn't mean it can't get up here and spend time and then go again. And
Right.
so my only point is that there's some great techniques out there that are very helpful. I'm going to show this one. This is the NASDAQ 100. This is a chart that Roman did, and this shows a count. This is the accumulation count of the March area. This is a 1 hour chart, but look at this intraday data. Look at
Mm.
where it counts. And this is from a count line area of around 7,500, let's call it. Counts up 15.4 to 16.1. We now have a reaccumulation count, and you just showed some charts of these FANG stocks and how they're coming to life again. And this count now confirms this count, and this count confirms this count, and it counts up to 16.7, 15.8 to 16.7. So just to leave viewers with the notion that there is still potential for more upside ahead. And then
That's pretty
the
good
other
upside.
yeah, good
Yeah.
upside. And so, and we're still working off that base that was made back in the spring. So we have, if I was to sum it up, I would just say that, so much of the markets is to be able to follow in the footsteps of these large informed interests. This is what Richard D. Wyckoff learned as a young man at the turn of the 20th century, is that he was on Wall Street, and he studied the activities of these large, exceptional market operators. And he attempted to see what they did in the charts, which was hard work because it's not easy to find that information. But he was close friends with Jesse Livermore, and a lot of the technique that he taught is believed to be things that he learned from people like Jesse Livermore and others. And so attempt to follow in the footsteps of these large interests, do what they do, act in concert with them, and avoid, I would say, sort of the noisy news of
The day.
retail,
Okay.
financial news forecasting and so on, and just focus on the charts.
Bruce, I am so glad I reached out to you, and it was just, a shot I took when I saw a tweet you did, and it's one of the best interviews I've done, and I've done 1,000 of them over the years. So, really appreciate you coming here and edifying the FACE community. And now that you've done this, you're my new trading warrior brother.
Oh,
You
well,
can't get out of it, huh?
I'm all in. This
All
is
right.
my favorite thing to do and to talk about.
Yeah.
And I'm so grateful for everyone to have spent time with us today.
And they also want to know, the people that are watching you live and will see the video later, the best way for them to contact you if they're interested in learning more about your teachings.
There is an email address at the Wyckoff Analytics, and just go ahead and send it to me. Say this is for Bruce, and I will get it. And then, and I just want to conclude with this last chart, which is the dollar index. I know this is just the UUP, and you all look at more important indicators, but it was interesting because this decline in the dollar has now in the area of fulfilling its count. It's sort of right at the midpoint here. There is a bigger count for lower prices for the dollar, but I think that's a really good intermediate. And oftentimes when you get into a count zone, you'll consolidate. Maybe we go down to this lower count, maybe we don't, but this is where we would look for either accumulation or redistribution. So anyway, that's just something for the currency traders here. And you can see this has come down into a trend channel.
That's interesting because the dollar index itself, many are showing a breakdown of this long-term trend, and you're showing it just approaching it. So really appreciate the last looks too, Bruce. A great interview, and why don't we get back together in the spring, see what's going on, and I'm glad our paths crossed.
Well, it was a real pleasure, and I look forward to meeting again.
All right, everyone, Bruce Fraser, and you can find him on Twitter at at RD Wyckoff, Wyckoff. He's a
Perfect.
great follow and a great teacher. And I remember just from listening to what you've done right here, I appreciate it. And
Well,
that's going to be a
thank you,
wrap.
Dale.
And remember, don't just count your point and figures, your X's and O's, count your blessings. And we'll see you all tomorrow. Good hunting the rest of the day. Thank you, Bruce.